Hey guys, in this video I'll be sharing some insights into a commonly asked question in trading, which is, should you trade the news? I know you've probably seen on YouTube or Instagram different traders, especially influencers, trying to show you how they made a certain amount of money trading NFP, CPI, or whatever news it is. And sometimes they also make you think that you can easily do the same thing. Myself, I have a very conflicting approach when it comes to news trading, especially if you are trying to become a consistently profitable trader. The aim of this video is not to try and convince anyone to follow my trading style or approach, but I'll just do the breakdown of trading news, what it actually means, the negatives and the positives, if any, and then you be the judge and you decide whether it's actually worth it to be trying to take trades during news or not. I'll also clarify that sometimes the news can come when your trade was already running before, and in this case there is very little that you can do. However, in this video I'm addressing the type of traders who intentionally anticipate for the news to be released and try to make some money by reacting on the economic data released. From a professional point of view, it's generally almost impossible to achieve long-term consistency by simply waiting to react on the news and trading it. The market usually reacts to the news with extremely high volatility, and this usually causes price to spike up and down both sides. This means you will see rapid buy and sell moves in the market within a very short period of time. It all happens very fast, and even if you are trying to get a trade in the market, you won't be in a better position to execute perfectly. With this extremely high volatility, there are a few number of challenges that you will face. Number one, you might be right on the news prediction, but this doesn't mean you'll profit in the market, because as the market is spiking up and down, it wipes out both buyers and sellers. The second challenge is, with this high volatility, you can't have a consistent risk to reward ratio on your trades. Now, in the normal market conditions without news, you should have the chance to get your entry levels as accurate as possible. Then you can set your stop loss and take profit based on a strategy that you've already backtested. And this is what helps you to have that consistent risk to reward ratio, because you can predetermine the amount of money you're willing to lose for every trade, and that will also determine what you'll gain. With the high impact news, on the other hand, there's nothing like a perfect entry. In fact, just before you take your trade, the market or the price will be jumping up and down very fast. Assuming you get a trade and it goes into profit, it's hard to tell how far the market will go considering the rapid price reactions. That's why you'll find many traders during news, whenever their trade is running just a little bit into profit, they end up closing it anywhere. They don't have that confidence to say, I'm going to hold this trade to maybe a risk to reward ratio of 1:3 or a 1:4, because the market can do anything within seconds, and the type of trading that they are doing is not something that can be backed up from a data point of view. What this does is, in one news you can make so much money, and in the next news event you end up losing even much more. It's very difficult to have that consistent ratio or the balance between your losers and your winners, because no one can tell how the market will behave during news, and it will always be a different reaction every other time. Before you continue, let me introduce you to this platform called Fastbull, which I use to follow up with the market news. It has very many sections. As you can see, we have the economic calendar there. Inside the economic calendar, you can see the news that is coming this week. You can also check through the past data that has been released in case you are interested. You can go back in time using this calendar. Fastbull is a website that I recommend because it's very easy to customize. If you come under the screen, you'll realize you can select the news from the countries that you want to receive the data from. You can also customize your calendar to only receive high impact news, which is something that I always do. Myself, I always avoid trading whenever we have high impact news. So you can come and select the 3 stars here so that you'll be receiving only high impact news. When you are inside the economic calendar and you are someone who struggles to understand what this data even means, you can just click on the news, then it will open to your page. In the page, you'll find detailed explanation about that specific news and what it actually means. Maybe that will help you to have a clear understanding of what is going on in the markets. An important thing to mention is that they also have a mobile app, which is a plus. So whenever you are outside the house or somewhere where you can't access, let's say, your laptop or your PC, it's always easy to be able to follow up with the economic calendar from your phone. So you can download it on your phone, making it very convenient. The final thing I'll just mention is this 724 page, which will be showing you all macroeconomic events across different markets in general. So now this is not just about the Forex market, this is about even the futures and global macroeconomic news, even political news. So if you want to follow up on on that, you will find it here. And that's it. So let's get back to the video. The third challenge you'll face is slippage. The high volatility during news sometimes causes a delay at the time or the place at which your order will be triggered. For example, you can get into the market and you place your stop loss at a point where you're supposed to lose only $100. But when the news comes and the trade goes against you, the market will surpass your stop loss level very fast within microseconds, to the point that by the time the broker server is actually closing your trade, it might be a few pips late. And this is what we usually call slippage. Instead of losing $100, you might end up losing twice or even thrice, even more, depending with how rapid the market will react. Now remember, these are all things that are not factored in your trading plan, because in your trading plan you wanted to lose $100, but the slippage might end up making you lose an amount that you have even no control of. I know someone might think that they'll open their trade and then once it goes into profit, they set their stop loss at break even. But the thing with slippage is it doesn't know break even. Even your break even will get surpassed and you'll still end up losing on that trade. So that's how terrible slippage is. And it happens during high impact news most of the time. Based on these three challenges I've given you, you will realize that trading news is more of gambling, not because you can't predict how the news will come out, but even if you can make a perfect prediction of how the news will come out and it ends up being respected, the market conditions are just so terrible and unfriendly, making the odds against you most of the time. My conclusion is, long term you can hardly find any consistently profitable trader who relies on trading news in a reactive manner. Besides the challenges I just explained, the statistics also show that most traders blow their account during high impact news. One of the clearest gaps with news trading is that it's not something that can be defined into an exact strategy that is proven in the market from a data point of view. 90% of the time when you find someone trading the news, just ask them, are they following any specific criteria? Most of them are just trying to react on the news. So it's not something that they can prove from the data and that they can show you from the backtest that there's actually a proven formula around how I'm approaching the markets during news. Even if this formula existed, you still can't ignore the fact that each news will always behave differently. So with news, it's still very difficult for you to say, I've collected data and try to rely on it, because the next news might end up becoming the worst that we've ever seen. You can make a good amount of money trading normally during a week or within a month period, but it takes one bad day of trading during the news to wipe out all your profits. When you come across traders showing you how they made a lot of money during NFP or CPI, and mostly influencers, you will realize that they only show you when they made the money. But sometimes the next CPI or NFP, they don't do any video to show you what they made. It's simply because most of the time they end up losing even double or triple. But again, the next time they are lucky and they make money during the news, they come to portray to their followers as if it's a very normal and doable thing that can be achieved consistently. And that is where most traders get lost by following the wrong people in the industry. So that's it for this video. Make sure you don't end up having a gambling mindset by trading the news, because it's going to affect you even in your normal trading. And if you still choose to continue trading the news, of course, the decision is yours to make, but at least you have a proper understanding of what that means. My own approach is I always wait for the market to settle, then I proceed with my technical analysis after the news, instead of trying to react and be lucky once in a while. So I'll see you in the next video. Don't forget to subscribe and also share your thoughts on trading news.